G'day folks, welcome back to another week of natural gas updates. Here we've got natural gas, oil and UNG dropping since our last update, and KOLD has risen slightly. First, going to the heat map, you can see there at the top right, we've got natural gas still predominantly bullish on the monthly and weekly, although bearish on the daily. And we've got a bit of a mixed signal, the potential neutral positioning on the daily on all the other ETFs, and predominantly bullish on the weekly and all the other instruments you can see there, which we cover in various other videos occasionally. In terms of a trading idea or trading strategy we use, we trade in the direction of the larger time frame. So if you're trading on the daily daily time frame, you trade in the direction of the weekly trend. And if you're trading on the intraday, like the 1 hour, 2 hour, 15 minute, etc., you trade in the direction of the daily trend. We enter the trade when the CCI 150 has a fresh breakout from the moving averages, and that CCI 150 indicator is available in the description below should you wish to learn how to draw it yourself. Videos there. And to exit the trade, we enter or close the trade when the CCI 150 enters back into the moving averages, and that applies to both the CCI 150 moving averages, but also the price moving averages, which again is in that video attached. First, looking at natural gas. So we look at the time frames on the weekly here, the monthly, and the daily. And on the monthly, you can see it's broken above the moving average band, so giving us a slight bullish signal, although it's still below the moving averages of the price chart. On the CCI 150, again, it's above the moving averages, giving us a bullish signal, and that is also broken above on the price moving averages. And on the daily, it's broken below on the CCI 150. But it's just about neutral on the price movement, so that's giving us a bearish signal at the moment. Now, one thing to notice as well is if I draw a Fibonacci between that support at 25.32, which is where that low of that candle is, up until that high, you can see there it's actually about midpoint between the 50 and the 61% Fibonacci retracement level. So if this breaks below that 61%, we're going to see a continuation of this downtrend on the CCI 150. But it's also going to confirm the break below the moving averages of the price, which will be a lot stronger bearish signal. So at the moment, using that daily as a base, and there's that daily chart there. Let me just delete that Fibonacci so we don't, to make it a bit cleaner. So we take predominantly short trades. So basically where we are today, you can see here on the hour, this is the hourly chart. It's still breaking below the moving averages of the CCI 150, but also the price chart. And we wait for a break below the moving averages on both to enter a trade. So you can see here, for example, back there, that would have been ideal to go short when it broke below the moving averages of the price, but also broke below the moving averages of the CCI 150. Then you would have closed it out when it enters that CCI 150 range in there. So you would have gained those few points in that going short in that little area there, and avoid going short again. You could have taken a position going short there, but that would have been potentially a break even, or even if you held onto your position, you still be in a trade and then close it out again, probably a break even when it enters into that moving average range. And hold off until going to go short again until we see both the CCI 150 and the price break below the moving average range there. So at the moment, predominantly short trades on the natural gas price. For BOIL, there is no CCI 150 on the monthly chart, but notice it's well below the moving averages of the price chart. On the weekly, it's actually had a bullish divergence versus a bearish movement on the price. So that's a bullish divergence, meaning it's going to bounce and potentially we're not sure how high it's going to go. But what we do is we draw a Fibonacci. And again, let me just draw a Fibonacci for those new to the channel. We take it back to the previous high before that divergence started. So you can take it back to that point or even that point. But you can see there, even if you take it to that point, the 23% is quite a long way away from as a retracement on that little range there. So it's got a long way to go in terms of a target range, but we're going to keep that in there so long as that's a bullish movement on the weekly. So that's the weekly time frame. On the daily, it's broken into the moving average range of the CCI, giving us a neutral signal. But notice the price has come back down and broken through the moving averages of the price as well. So again, using that as a indicator for the hourly chart. Going to the hourly, again, it's neutral, so we avoid taking long or short positions on the smaller time frames until we see the daily break either higher or break below. But at the moment, you can see there, similar to the natural gas price, it's actually broken lower. If we draw a Fibonacci, let's take it back to that level. You can see there it's broken below the 61% level, or it's hovering around the 61% at the moment, which means it could bounce or it may continue further. And if it breaks much further, we're going to see further declines. There's no sign of a divergence on the CCI, so it looks like it may well continue further to the downside. So just be careful about trying to catch the low in the market. Again, I avoid trying to do that. Always go with a larger time frame direction to trade. So I would only take long trades based on the daily, in this case. Take long trades during that period and only short trades when it breaks below. That would have been a false break, obviously. When it broke below there, you can see that it would have been that period there, and you would have taken that small loss as you got out, or maybe a small loss there had you gone out before letting it get too much away from you. Now, KOLD goes in the opposite direction, as you well know. You can see here it's broken above on the moving averages on the monthly of the price chart, but no CCI shown on the monthly. On the weekly chart, we did have a bullish divergence here. You can see there higher lows on the CCI versus lower lows on the price, and it's bounced. You can see there it's made a nice little bounce, but not quite as high as the 23%, but still made a nice little advance. Now this is actually breaking below the moving averages of the CCI, but also the price. So again, if you're trading on the daily time frame, you'd take short trades only during this period, and that would have coincided with, let's go back to, you can see there based on the weekly taking short trades only, when both the CCI and the price chart have broken below the moving averages, that would have coincided with this period back here, and you would have taken short trades there and closed it out when it broke above. And I've used an exponential moving average 9 there as an early warning signal, so you would have possibly closed it out on that bar there, or at the very least you can see there that CCI gave you an early warning, and that you would have closed it out on that bar based on the CCI breaking into the moving average range. Now going to the hourly chart, again using the daily as a reference. So in this case you'd avoid going long or short until we see the CCI on the daily confirm one way or the other. But at the moment it's breaking higher on the hourly time frame, and it's bounced off that support at 36.35 on the hourly. Now again, using a Fibonacci between that low and that high. Now that would have been potentially a double bottom on the CCI. I consider that a bullish divergence versus lower lows on the price. That's still a bullish divergence. You can see there it's broken up and hit the target range. The minimum target range we've got is between a 23 and a 38% level. So it's already hit that range, but of course it could go higher. And if it breaks much higher than 61%, then we're looking at further long upside. Lastly, we look at UNG on the monthly. It's broken up in that moving average of the CCI, giving us a neutral signal, although the price is well below its moving averages. On the weekly, we did have a bullish divergence here, and you can see there it's starting to make a bit of a move to the upside and still bullish on the weekly. And on the daily, we did have a bullish divergence here versus lower lows on the price, and it's bounced up from there, and it broke through the 23-38% target range. So if I just draw you can see I always draw those target ranges. That's a minimum target range, and more than 90% of the time it hits these target ranges. So again, if it breaks much higher than this initial resistance at 21.60, which we've drawn, it's hit it twice already, and then it needs to break a lot higher than at 61% to be more bullish. So we'll just keep an eye on that in the coming days. So if you got value out of that video, hit that like and subscribe button. Hit that notification bell. Thanks for watching, and see you in a future video.